Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hey guys, how's everybody doing? So let's get into these markets right now. Let's quickly go over the calendar. So during London session, we had a bunch of news out. We had Euro, French flash manufacturing PMI, German, ECB speaker, and then we had GBP flash manufacturing PMI as well. So it was quite an active London session. I was short overnight. I did manage the stop, so I took a half-hour loss. Unfortunately, it came up to the previous daily high and stopped me out. But overall, this market, in my opinion, is still quite bearish. Now, with the dollar, right, we did take out the equal highs that were created yesterday. So we had these equal highs. We've taken them out ahead of New York session. But overall, if we get a strong weekly closure here, I'm looking at this rejection here from this weekly fair value gap, and then these two down close candles will become our bullish order block. Now, the last stream that we were on, guys, I mentioned to you these two candles that don't have wicks, and I was looking to see which one of those would be traded to when we were trading around here. So this here is really just our external range liquidity. And you guys can see that here, you retraced into here, which is our internal range liquidity. We have this fair value gap, and I'm looking to see if we're going to propel up to this candle up here. But the fact that today's Friday, and we have a news event out during the New York session, we might just get a TGIF. So we've taken out this weekly swing high. We might get a TGIF where, end of this week, going into the beginning of next week, we could retrace lower. And next week is Thanksgiving, so we have to be mindful of that. We might just chop around. We might have an inside week because this week was an expansion week. So if we have an expansion week, we might expect something like this, right? So if we have this expansion week, look what the following week did. No real direction. Even though there was probably intraday or intra-week opportunities inside of this candle, we're not breaking above the previous high. We're not continuing higher. The following week after that, another inside candle. So we just have to be mindful of the holidays. And me personally, I've mentioned this before, but I tend not to trade a whole lot going into the end of the year. Like the last month of the year does not typically dictate if I'm going to be a profitable trader for the year or not, right? Your year should pretty much be wrapped up. And a lot of times you're not going to, make up for it in the last couple weeks of the year. Either you're profitable, you're profitable already and you're trying to wrap it up, or you are break even or unprofitable and you should be taking some time to reflect and figure out, what's stopping you from becoming a profitable trader. So we do have some news out at 9:45. I will not be on here during that time. We have CAD news out in 20 minutes, so maybe we'll take a look at the CAD. The CAD looks quite bullish. So we have this old swing high here, all right, this retracement down into this weekly fair value gap. And overall, it's just been trading higher. But again, today is Friday, so we might be trading up into this resistance level, maybe trading back down to this down close candle before trading any higher. Right. So the risk on Fridays for continuation, it's elevated. You don't really get a lot of continuation moves on Friday. So what I'm looking for on the euro, obviously, So we did trade above that previous daily high and traded lower, right? Because we have this daily fair value gap. And on the futures chart, we actually have equal lows down here, but on the Forex chart, we don't. To me, that doesn't really make a difference. This market is still creating a lower high in here. So here is our high. You guys could put this as intermediate high. And then lower high. This text is way too big, guys. So once we rolled over here, right, we have this daily inverted fair value gap, right? The closure below that candle basically invalidates any long idea. The following day, however, trades up into that premium level, right? So this previous low here, you guys can see that just coming up to retrace and hit that level and then roll over again. And then the following day, trading higher, creating this higher wick, and then trading lower. So obviously where you're trying to be short is in a premium level, which both of these candles, right? You would have had to go short if you're trying to position yourself properly, at least, and have the most efficient risk to reward. You're trying to position yourself somewhere inside of the wick. So if you're entering in here, let me just draw. Let me use a brush. If you're entering anywhere in here or in here, is much better than if you wait for the candle to trade below the open and then you're entering down here because the risk is now elevated. All right, so a hard thing that you have to understand is shorting the markets when it's going against your idea. That is not a comfortable thing to do. I'm not going to go over gold. Yeah, I may never go over gold, guys, just because I'm not a gold trader. And honestly, following markets that I typically don't trade, it's just too much confusion. Monday, what made me switch bias? Which day was Monday? Here? Well, we got a closure, right? The 17th, I believe, is Monday. Yeah. So here we have an inside candle, right? And usually after inside candles, we get some type of determination of whether the market is going to go higher or lower. Inside candles to me are indecision. But then this following day, right, closes through this bullish fair value gap. That to me is not bullish, right? So we have 2 consecutive bearish days. And a lot of times when I'm looking at markets, I tend to just trade in the direction of the previous day because you will have periods, and this overall can make you profitable. Just trying to trade in the direction of the previous day until it changes, right? So if you're short here, let's say you got short the next day and then short the next day, and maybe you get short this day and you take a loss, but then you get long on this day, and then long on this day, and long on this day, and long on this day. Maybe you take a loss on this day, right? But you go short again the following day. It's trading daily candles, at least. You will typically have 2 to 3 candles that follow a previous day. So if we get all of a sudden a bullish day, it's likely that you're going to have another bullish day followed up by that. Unless we take out buy side liquidity, right? Then it's a different story. But right now we are trading down into this daily fair value gap, and it's likely going to have a hard time getting through it. Does this market want to trade higher and maybe trade up to this candle's low before going lower? All right, we'll have to wait and see. But we've had 1, 2, 3, 4, 5 consecutive days of bearishness. I unfortunately did not take advantage of all of this. I've been traveling. I haven't been focused on the markets, and that's something that you guys have to understand as well. How many of you guys try to trade when your life is chaotic? Typically for me, it doesn't end well. When I have a lot of things going on and I can't get into a proper routine, I have a hard time in markets because I'm not spending the time that I probably should be, the night before, preparing, journaling, getting ready for the next day. And the biggest thing is that you're trying to have a consistent strategy that you can repeat over the course of 12 months, right? That is a big ask, though. Over the course of 12 months, you have to remain consistent in winning streaks and losing streaks. And I don't know if there's any trader out there that doesn't go through those high and low periods in their trading. So, on another note, Funding Ticks is making changes to their Pro Plus plan. They're removing subscriptions, which is huge. And I believe those changes go into effect on Monday. How to build a strategy. So, first of all, you need to have something that you're confident in. Otherwise, you're not going to be able to follow it. So, building a strategy, right, requires you to have some type of knowledge base when it comes to technical analysis. Whether it's moving averages or just straight up price action or trend lines or volume, it's something that resonates with you and makes sense and something that you can repeat on a consistent basis. Because if you don't have confidence in it and if you don't have enough data behind you, a lot of you just probably don't have enough data trading one specific strategy. Because what happens is you go through a losing streak and then all of a sudden you want to change things instead of just trading through those hard periods, right? That was me for many, many years. I would trade something, it would work for 2-3 months, and then I would go through a losing period and then try and find another strategy because I just all of a sudden assumed that the strategy just stopped working. Instead of just trading through those rough periods or learning how to step back when my strategy isn't working. And I've probably mentioned this way too many times over the last couple days, but let's say if you have a strategy that works just 50% of the time, how can you become a profitable trader? By having better risk to reward or holding your winners longer and filtering out the losers. Maybe 25% of the losses, even just 10% of the losses that you take can push you into the 60% win rate section. As long as your risk to reward is good. What if you remove 20% of the losers? I find that many of the losers that you take as an unprofitable trader just goes against your system, right? You're trading at the wrong times. You're not trading in line with what you said you were going to do. And those should be easy fixes, but when you sit down in front of the charts, they're not. Because your emotions are overriding your logic. How many years did it take me to become profitable? Way too long. Probably 10 years. But that's because I had bad habits that I just wasn't willing to address. So over trading, revenge trading, over leveraging. I just never addressed them. I never wrote down why I was doing it. I never understood why I was doing it. But a lot of it came down to my emotional triggers. Like when I got angry, I would go back into the markets. So if I got stopped out, I would go back into the markets. And sometimes it was because the market was showing me things that, maybe didn't really exist. If my trade got stopped out, I should be done for the day. Because I am a higher time frame trader. I still trade intraday sometimes, but I am better off having one idea for the day and being done because I know that the market is going to be trading tomorrow. Yeah, my strategy is very simple. My entry methods, however, change. As far as a strategy, all you're trying to do is make an educated guess on if the market is going to go up or down and use logical stop losses and take profits. It can be as simple as that. But when you start overcomplicating your strategy and you have, 30 different tools that you need to align before you take a trade, now all of a sudden you have 30 different variables that you're trying to manage all at one time. How do I deal with getting stopped out at break even for a week? It's just all emotional control. Yes, it's frustrating, but I also don't set weekly targets. I don't set monthly targets. I don't set daily targets. I take what the market's giving me. So if the market's going to give me break even, you just have to accept that. Yesterday you took a long, and then you took a loss. Well, you're trying to pick the bottom, right? So when you look at the daily time frame, is any of this bullish? We haven't even gotten a bullish candle. The problem is that we created a lower high in here on the higher time frame. So there are opportunities to go long, but just know that you're going counter trend, right? We've been in a bearish trend since September. So yes, there are days where the market's going higher, but these are just small retracements, right? This here is just a retracement. This here is just a retracement. This here is just a retracement. So I'm looking to see if the dollar is going to turn and trade lower from where we are, even if it's just towards the weekly open, you know, taking out some of this range, because it is Friday, right? So it's Friday. We've already taken out these highs in here. Let me just remove all of this stuff. We've taken out these highs, and now we have a bearish engulfing candle on a Friday. Usually, at some point, we're going to cap the high of the week. You know, whether that's Wednesday, Thursday, or Friday. Current weekly is a vortex candle. Which asset? Dollar? No. It does have a wick. There's a wick down here. Now, if you're talking about this candle or this candle, right? It feels like the market wants to gravitate towards this candle that doesn't have a high. Right? There's a small gap in here. Right? So we have this weekly closure, and then the open of the following week, there's a gap in there. But we've got 10 hours to go. Next week is a holiday week, so the volume could be very low next week. Am I trading gold? No, I typically never trade gold. I traded gold for a challenge. You know, just for a tournament, just because it was like one of the asset classes that were allowed. But outside of that, I'm typically not trading gold. It's a really small wick though. Yeah, that doesn't make a difference to me. I'm looking for candles that don't have wicks. Like this candle, if you look at the high and the open, they're the same price. 100.905. That is what I'm looking at. This down here, the low is the same as the open. Right? So 97.957. Those are the candles with no wicks that I look at as vortex candles. Because it's going to draw to one of those. You know, there aren't many candles that where you get, you know, a candle that doesn't have a wick that doesn't get traded to in the future. You know, it just going back through, you know, all of last year's price action. How many of these candles don't have a wick? Almost every single one of them. You know, I don't see any weeks in here where candles don't have wicks. But when they're left open for long periods of time, you know, they often become areas where the market's going to trade to. We do have one that's all the way up here as well. So the market may trade all the way back up here at some point, but how long is it going to take? I don't know. Yeah, you can use the dollar for dollar CAD correlation. But the thing is, oil has an impact on Canadian dollar. So sometimes you'll have periods where the dollar's going higher and the dollar CAD's going lower. And if you take a look at oil, right, it has a major impact on Canadian dollar because it's like one of their biggest exports. So we've got news out in 3 minutes. So paying attention to this level on here. But I'm not confident that the market is going to continue higher today. But I'm also not going to short the dollar yet because I'm have an overall bullish thesis on the dollar. But I fight the urge to not fade moves. I just don't trade in the opposing direction of where I think the market's going to go. Because those concepts that you see on the lower time frame will fail if you're not in sync with that higher time frame. Right? And then become inverted levels. Can I show how I scale into a trade? Yeah, it's quite simple. So let's say if I wanted to get short, and let's just assume that this is our price action, and maybe it's easier if I put a line chart. Let's say I went short back here after taking out this high here. All right, I'm gonna put my stop here. My target's all the way down here. What I'll do is wait for another important area of market structure. So maybe we take out this high here. Now all of a sudden I'm able to move this stop. So this original stop, and I'll just put this here and I'll make it red. So this, let's just say that this is my stop loss. How much risk do I have on currently? How much risk would I put on this trade? Not dollar, not percentage. How much risk? It's a very simple answer, guys. Yeah, 1 R. If I have 1 R on this trade, but I'm able to move my stop loss past break even. Let's say I move my stop loss to this new high here. How much risk do I have on the trade? I don't have any risk because if I get stopped out, I make what, 0.25 R? Then let's say if I add another position here or on this retracement, it doesn't really matter to me. And I put my stop loss here, my target is the same area that my first position was. Right, how much risk am I adding to the trade? Another 1 R. But if I get stopped out, I'm going to lose on this second position and make money on this first one. Right, so I don't actually have 1 R at risk. I have like 0.75 R at risk if I get stopped out of both. But if it goes to my target, how much do I make? Instead of me making 4 R, now all of a sudden you got to add another 2.73 to it. Yeah, less risk, but more reward. Because essentially I have 2 positions running going to my target. Right, and that's how I scale into trades. I typically will not add when I can't move my stop loss to break even. Analyze the quarterly chart of Dixie. Yeah, so I kind of what I'm looking at is how we're going to close this quarter. So we've ran below this low. I wanted to personally see a trade lower, but the way that the dollar's trading right now doesn't feel like it's going to trade lower. So if we get a closure back above this low, you know, I'm more inclined to lean bullish and want to see if this sell side imbalance is going to be eaten up, and then we'll turn around and trade the other direction. Right, so we have this fair value gap that we traded down into. And maybe this is just a retracement down to a discount. So if we draw out our Fibonacci from this low to this high, right? Because this is our range. It hits 70% of the range. This right here is our discount. So overall, this market is creating higher highs and higher lows. Yeah, you couldn't get in because there's no clear PO3. I mean, it really kind of just started trading higher on Monday. And at this point, maybe you want to just try and get long after we get a closure back above this down close candle. For me, the dollar's been hard to trade. But we had the CAD news come out, but not much of a reaction. Do I also trade on the weekend? No. I don't trade on the weekend. Something that you guys all need to add to your trading is like regularly planned breaks. You know, I'm not afraid to admit that I'm just feeling burnt out this year from the markets. I had a massive year. Over $3 million in profits across personal and cross prop. But that level of focus, it took a lot out of me. And I feel like I haven't really reset. So what I'm trying to do into the end of the year, through the holidays and into December, because I typically do not make money in November, December, like towards the end, is that I'm just going to spend some time reflecting, journaling, and waiting for next year. BTC is going to zero. I guess we could take a look at Bitcoin. Bitcoin's at a very important level, I think, right now. You know, we ran above this buy side liquidity and then just completely rolled over and died. So if you take a look at the monthly time frame, we got a very large bearish engulfing candle here on the closure of last month, and then this month, November, we're getting a very deep retracement. Right? Does it want to respect this range low though and trade higher, or are we going to go take that out? And private jet? Maybe never. But I would be very cautious of trying to pick a bottom at the current moment. Because if you're trying to get long, you don't want to be the first person getting long, right? Can I elaborate more on the breaks? Because you're a beginner trader and stuck looking at the charts. I mean, there's a balance, right? So you do need screen time, right? Like, I'm not going to tell you that you just can just show up, take breaks, and eventually become profitable, because trading takes a lot of work. But for me, what happened was I would spend tons of time in front of the charts, maybe just like you're doing right now, like way too much time in front of the charts. You're not getting enough sleep. You're, you know, I guess pouring everything that you have into the markets. But then you go through a burnout phase. Maybe you're blowing accounts, or maybe you're just struggling at break even, and you don't give yourself that break. What happens is you get so tired of watching markets because you're not seeing the progress that you just burn out, and then you leave the markets for weeks, months at a time. That was me for a very long time. I would try and overstudy, overanalyze everything, and then not have any energy to actually trade the markets consistently. So it led to long periods where I just didn't want to look at markets. And when I sat down with Umar Ashraf, he mentioned it when I sat down with him during a podcast. Like, he hadn't looked at the markets for, I don't know, a month, 2 months. and then he comes back and he wants to trade again. But that's because he's planning on taking breaks throughout his career. See, that's a little different. When you're trading prop firm accounts and there's inactivity, I think you could reach out to them though and let them know that you're going to take a break, and some of them will allow you to take that break and put a pause on your account. You know, just reach out to the support team. They might be able to put a lock on your account so that way you're not losing the account, and just tell them, "Hey, I need to take a break." Can I share my strategy? I mean, you could just visit my YouTube channel. And my strategy is very, very simple. I'm just trying to make an educated guess based on the context of the market on which direction it's trying to go. From there, it's all about trade management, risk management, and emotional control. That's it. The last three things that I just mentioned, though, is where every trader fails. They don't have any emotional control. They don't have any consistent risk management. Right? And they're not managing the trades properly. So like either you're micromanaging your trades, not seeing them through, because markets at times move slower than you anticipate. Right? If you have a trade idea, sometimes it takes a long time to get to your target. You're not taking account of that. When you're backtesting, it's easy to just sit down and hit the fast forward button, right? You can sit down, hit the fast forward button, and now all of a sudden you have the outcome of the trade. But you can't do that in the live market. So you have to get used to the emotions that you feel once you place the trade. And I can't do that for you, right? You have to go through the motions of, all right, I'm going to place a trade. I don't know what it's going to do after I place the trade. I just have to wait patiently. It's not comfortable to do. Trust me, it's not. But that's something that you have to learn through experience. You have to go through those trades where, you know, looking at your data, and I had a lot of data on this. What would happen was I would take a trade, and then I would just start zooming into the lower time frames for whatever reason. So I might be taking a daily trade, and then I would zoom into like the 5-minute chart. And then I would see things on the 5-minute chart that went against my idea. And I would be back and forth, you know, going long, going short, going long, going short. And if I just held that initial position that I had and had more patience with it, I would make money. Like sometimes those trades took 14, 18, 24 hours to get to hit my take profit. But in that 24-hour time span, I would make so many mistakes. I was trying to micromanage the trade. Instead of just placing the trade and being comfortable with the outcome. No, I don't use seasonal tendency. I found that adding all these things just adds too much complexity to your trading. At the end of the day, the market is going to close higher or it's going to close lower, or it's going to close in the middle of a range. That's it. However you come to that conclusion, though, whether it's going to go higher or lower, I think you need to try and keep that as simple as possible. Yeah, it's a game of probability. So just think about this. Does seasonal tendencies impact the outcome of your next trade? Because I've traded in seasonal tendencies where I've just got way too married to that idea that the dollar or the euro or NASDAQ should be trading in a specific direction. And then I would just get completely wiped out because I was not paying attention to what was in front of me. If you're afraid of taking positions, it means you're missing edge or risk. Your risk is too high, or you're just not confident with what your system is. And that usually comes from a lack of data and a lack of not trading that strategy long enough. Again, like I mentioned, when you're trading a strategy, you have to be able to trade it through the hard times. Like if it's just not working for you right now, that doesn't mean it's going to not work for you in the future. You just have to stick with it and learn how to manage those drawdown periods. No, I don't really look at SMT. Sometimes I do. You know, I think you guys would be surprised at how simple my strategy is. Sometimes it could be as simple as fair value gap in the direction I'm trying to go. That's it. If I'm bearish on the higher time frame and I see a bearish fair value gap, I'm going to short it. Because it's not giving me that room for error with adding so many different things. What about this SMT? What about seasonal tendency? What about all this stuff? I'm not asking those questions because I'm not even thinking about it. I just see a setup, an entry model that aligns with where I'm trying to go on the higher time frame. That's it. It can be as simple as that, guys. And adding more complexity to your systems often doesn't lead to more profitability. You know, how many of you guys have something that works? Well, you're trying to hit home run trades all the time instead of just being comfortable with what works. That's simple and repeatable, right? Because a lot of you guys get bored and now all of a sudden you want to change things. But profitability is found in the boredom. When you find something that works, even just 40% of the time, all you have to do is refine your risk to reward and your trade management, and now all of a sudden you're profitable. But once you have that system that's profitable, you don't need to do anything else. You just need to show up and trade it consistently through the course of 12 months. Yeah, ICT gave you a million ways to enter. You just need to find one entry method that really resonates with you. So overall, dollar CAD is just kind of barcoding. So we had the news release come out, but it really hasn't gone anywhere. Now, I am interested to see if this market is going to have some type of TGIF and trade higher. But dollar would need to turn around and trade lower towards the weekly open. But again, overall, I'm not bearish on the dollar. So what I tend to do is just wait for a long opportunity. I just tend not to go long on Fridays after we've already taken out Thursday's high. The win rate of my strategy changes. Some months, 70, 80%. Some months, 30, 35%. But on those months where it's 30, 35%, if your risk reward is good enough, you're still a profitable trader. So, you know, some of my biggest winning streaks have come when I've had the lowest win rate. You know, believe it or not, guys. Because I'm anticipating higher time frame moves that I try and scale into. So I'll take 2 to 3 losers, but one winner will make up for all of that if I get the direction correct. So we can review NQ. NQ had a massive sell-off yesterday, which I was not anticipating. So we ran above the London highs, got a closure below, and then just completely dumped, which I was not anticipating. And then we had all of this low resistance liquidity get taken out. But because it's Friday, maybe we just trade more into this range. So there's probably a breaker in here somewhere. We have this level here, right? These two up close candles prior to the run on liquidity. As long as we stay above that, NASDAQ could see a push today. So, I mean, hopefully that resonates with you guys, where you're probably stuck in that loop or that cycle of just education, education, education. And the only way to get out of that is to just take what you've learned and just execute with it relentlessly. Right? Finding something that you're confident in, that you could show up to the charts and execute 12 months out of the year without changing anything. Right? It could be something as simple as a breaker. It could be something as simple as a liquidity raid. And you just trade that setup over and over and over and over again. And that's how you build confidence in your trading. You don't need to add anything new. You don't need to look at what other people are doing online. You just show up and execute. Sometimes you win, sometimes you lose. And that's part of trading. Most of my trades are entered during some specific session, but markets are always moving. Hourly bullish rejection lining up with 15-minute fair value gap low. I mean, again, I'm not really looking at everything. I don't think you need to see everything to become profitable. Like, if you come up with a bullish idea, and I come up with a bullish idea, whether I use a trend line or a liquidity rate or a fair value gap, we're both long, right? If we're both long, does it really matter how we got to that conclusion? Some people could be long based on a moon cycle. If we're both going long at the same time, this other guy over here is using a moon cycle and I'm using a breaker. Does it really matter if the market trades higher to our targets? Why is it lining up to the pip? I don't know. I personally, I don't look too deeply into that. Again, I'm not trying to overthink markets. And to be honest, markets to me are not rocket science. It's either going to go up or it's going to go down, guys. And you just have to be comfortable. If you're long, if it goes against you, you get stopped out, that you're not going to do anything stupid and lose your accounts or over leverage on the next trade because you're too confident in it. You want to know how I was able to like remove myself and try and I guess eliminate the idea that markets are algorithm based and that they have to trade to specific levels? Was I would sit inside of the private mentorship with ICT and I would wait for his weekly outlook to come out. And sometimes he would say, you know, it's gonna trade to this level. And what would happen? I would full port my account, and then the market would go in the complete opposite direction and invalidate his idea. And that's when I realized that everybody's human. The market can do whatever it wants to do. And that sometimes you just get the markets wrong. But instead of me relying on ICT, I just turned off all the noise and just traded what was in front of me. And that's how you build independence. Independence from all these different concepts that everybody's preaching and marketing. You know, I just find that ICT concepts work for me. And even if they only work 50% of the time, that doesn't mean it's a bad strategy, guys. Somebody that has a 30% win rate could be outperforming somebody that has a 60% win rate. Just think about that. Based on their position sizing and their risk management. And that's when you know you're going to graduate as a trader, is when you're not so focused on just top level statistics. There's much more to the story than just by looking at the stats. It's how does this person operate, you know, when they are not confident versus when they are confident. You know, when they're not confident, they don't take massive losses. Retail pattern. I mean, retail patterns do work. Like trend lines do work if you use them properly. And it's just about filtering out when it's low probability. That's all professional traders do, is they look for high probability setups. They're not taking every setup that shows up. So just because I trade a fair value gap does not mean I'm trading every single fair value gap. Right? Because if I trade a fair value gap that goes against my high time frame bias, all of a sudden, to me, that's low probability. Why am I doing that? I'm just not following my system. And again, profitable trading is more so about filtering out and cutting out your losers. So for me, many of my losers just came from over trading and getting married to a bias, or oversizing on trades that I felt way too confident in, instead of just having a consistent, boring routine every single day. And I guarantee if you have problems position sizing, you need to make it an actionable part of your improvement to not over leverage. So trade the same size for 3 months. And if you can't do that, then you have a discipline problem. Right? It has nothing to do with your trading. You just have a discipline problem. Maybe you're impulsive. So as I mentioned, I'm looking to see if dollar is going to trade lower. If we do trade lower, likely going to take out today's low, maybe trade down into this bit of range here. You know, maybe trade down into this fair value gap. Right? Because this fair value gap rests in a discount. So we have this swing low to this swing high. It's very reasonable to trade down into this level, but still be bullish, which is honestly what I'm waiting for. I'm waiting to see it get to this level before I get long. Because if I go short right now, I know I'm counter trend. Yeah, process over outcome. And yeah, there's the key. Because a lot of you guys keep score based on your P&L. You think that positive P&L is good trading, but sometimes you could be breaking every rule in the book. So you need to look at your journal and actually say, okay, even though I made money, I broke every rule, and long term, that's going to hurt me. Because your P&L could be going the opposite direction. It could be going lower, but you're actually building good habits that over time will make your P&L go higher. And it's just a very short-term view when you're looking at your P&L. Because you could have, let's say if you have 9 trades in a row, or you followed your plan, your process, and then your 10th trade, you broke every rule in the book. But then that 10th trade, all of a sudden, makes your P&L look like you're a great trader. That doesn't last long. Thank you, Jade. I'm now 300K funded as I learned a lot from the one ICT strategy for life video. Yeah, and once you figure it out, you know, I think a lot of people complain that I'm releasing the same video, the same strategy over and over and over again. And what they don't realize is that nothing about that strategy changes. Like sometimes it's marketed a little bit differently, or sometimes I, add a little bit to it. But at the end of the day, you're coming to the same conclusion. Basically trying to determine if you want to be bullish or bearish on a market. How you come to that conclusion, though, to me, doesn't make a difference. If somebody's trading trend lines and they come to the conclusion that they want to be short on the euro, but I'm trading fair value gaps being short on the euro, does that make my strategy better than theirs? No. We both have the same idea that the market is going to go lower. And then from there, it's all a game of individualism. Like, how do you enter the market? How do you manage your trade as the market goes lower? How did I fix daily bias for myself? Well, I think very simply that I just try and have one idea for the day. Like me personally, I'm not flipping back and forth biases, which many of you are probably doing, because the lower time frame price action is throwing you out. It's throwing you out of whack. And let's say you came to the markets with a bullish bias, but then all of a sudden on these days, you see the market taking out sell side liquidity and then you want to get long. And then on this day, it does the same thing. It takes out liquidity and then you want to get long. Instead of just sticking with the bias that you had when you started the week. Because the market doesn't move in a straight line, right? It goes up, it goes down. And the uncomfortability of the market not going to your targets right away is something that you guys just have to sit with. What's my daily bias on Bitcoin? I haven't been following Bitcoin, so I can't really give you a daily bias. I'm not a Bitcoin trader, so. And sometimes it's okay not to have a bias. There's some times where I don't have a bias, and there's periods where I don't have a bias for weeks. And that's something that you guys just don't understand right now. And maybe you're getting misled by people on social media where you can trade every single day. But the harsh reality is that professional traders sometimes go through very extended periods where they don't have a good read on markets. And when you don't have a good read on the markets, that's really where you're tested as a professional trader. Professionals, what do? They just sit still. Meanwhile, amateurs are forcing trades when things are unclear for them. And that's the difference maker. So let's say an amateur trader, the markets are very uncertain, right? Let's just assume that the markets are uncertain. The amateur trader will force trades and then find themselves in a drawdown. Meanwhile, the professional trader will just wait patiently. And in the meantime, let's say the market condition turns around and we're both in sync and we start making money. Well, you as an amateur trader are just getting back to break even. Meanwhile, the professional trader is now in profit, right? Because they didn't take the trades when the market was unclear. And that is the difference maker between unprofitability and profitability, right? Just having the discipline and the courage to sit down in front of the market and say, I don't know where it's going to go next. I am not going to take a trade. You know, how hard is that to do? You need to have self-control to do that. But earlier in my career, just like many of you guys, have zero self-control. You don't know how to sit in front of the market and say, I don't know where the market's going to go today. But you force a trade anyway. And you see a setup that looks good. You take it, and then it fails. And then you scratch your head. You're like, why did I lose on the trade? Well, it's very clear. You didn't have a plan going into it. Or you went against that plan. Listen, nothing can help you with patience other than actively working on it every single day. And the only way to do that is by practicing what you preach. So if you say that you're going to wait patiently for a trade, and again, this comes to screen time because not everybody can filter out when they shouldn't be in a trade. Not everybody can do that. But that is really where you're going to see a large difference in your trading performance, is by sitting in front of the markets and saying, I don't know where it's going to go today. I am not going to take a trade. That to me is progress, right? Well, maybe it doesn't feel good at first, but you kind of have to rewire your brain and tell yourself that, you know, all these things are going to have a big impact on my trading in the future. And that's about thinking long term. What's 7075? Not an algorithmic reaction against my bias. It's just something that maybe I have an invalidation level on the higher time frame, and until we lose that level, that I just remain on side. Yeah, but break of structure, yeah. Because do you know if it's an algorithmic reaction or not, or is that just a figment of your imagination? For me, it's a figment of my imagination. I don't know if it's an algorithmic reaction or not. I just know the market's reacting a specific way. How to fix targets? I mean, you have to try and understand, like, markets are trying to move to higher time frame levels. But if you have a hard time holding your trades to targets, that has nothing to do with your target. That has to do with your patience and your emotional control when you're in the trade, right? This is a holistic approach to trading, and not everything is technical. Right? A lot of it's personal. I would say the majority of it is personal. Me not holding trades to my target had nothing to do with my target. It had to do with my patience. And like that example I just mentioned, earlier in my career, I would do exactly that. I would enter a trade and I had zero patience, so I found myself trading in and out of that position. And if I just held the trade with patience, it would have gone to my target, right? That had nothing to do with my target. It had everything to do with my patience. Your win rate was 36%. Yeah, it was 36 to 40%. But my average loser was like $1,000 and my average winner was like 3K. And that was on one account. So times that by 20 accounts. So my average loser was like 20 grand, but my average winner was like 60K. So again, if my average winner is 3 times my average loser, guess how many mistakes I can make? I can make a lot. I can make a lot of mistakes and still be profitable. And I'm getting my winners to pay for the losers. That's the biggest thing. If you can't get your winners to pay for your losers, then you have to win a lot. And that is a big ask. Yeah, so if you get a 1-to-2 ratio on every trade, you really only need to win like 40% of your trades. And for me, like, I'm not taking full losses a lot. So during that Apex run, I was taking small losses because if it moved in my favor, I would adjust my stop loss. And maybe I was taking a half-hour loss. It still counts as a loss, right? It still counts against my win rate. But that's how I keep my average loss down. You're trying to have big wins, small wins, break evens, and small losses. You cannot have big losses in trading. If you have big losses, you're fighting an uphill battle. If I'm bearish and then see a bullish pin bar off a daily low and maybe some other PD array, no, it's not really tingling my spider senses because that to me is trying to pick a bottom. And if the market is going to go higher, there's going to be plenty of time for me to get in line with going long. I'm not trying to be the first person to go long. Right, so maybe you get a bullish pin bar, and then we take out market structure, and then we get a bullish fair value gap. All right, now instead of just having that one confluence, now you have 3. And that, to me, creates high probability. So when it comes to confluence, you're trying to stack at least 2 or 3 things. When you have too many things, though, and you're looking for 10 different confluences and 20 different reasons to enter a trade, honestly, it makes it harder. You don't have the confidence to hold the trade because you have 20 different things that you're monitoring. And simple, to me, is more scalable. Do I add sugar and milk in my coffee? No, I just drink it black. Want to see? So I'm probably gonna hop off here soon, guys. As I mentioned, I am still bearish on the euro. But I typically don't like aiming for new weekly lows when the market's already, dumped lower. Like if we get a really strong bearish candle here, I'm gonna have plenty of time to get short. Like look back here. This market went bearish and then it stayed bearish for months. So I'm not really in a rush to get short. Because maybe next week this retraces and then I can position myself short. But again, these markets are always moving, and I don't feel the urgency to be trading all the time, which allows me to take a step back and say, all right, if I missed a trade, I'm totally okay not taking a trade. Can I check BTC? I mean, to be honest, I don't know where BTC is going at the moment. We are in a deep discount, and the market's sold off a ton, and the weekly has already expanded. So when the weekly candle's already expanded like this, I'd tend not to look at markets, because if you wanted to be short, you already missed it. And if you're trying to go long, you're trying to pick a bottom, right? So if you were trying to get short, you should have been short on Monday or Tuesday, right? You should have been short back here. Taking a long right now is elevated risk because we don't have market structure shift. We don't have a bullish fair value gap. We don't have anything that is a confluence to go long. And I can confidently sit down in front of markets and just say, I don't have a trade today. But if you find yourself sitting in front of markets because you either take off of work or you have the free time and you're forcing trades, then maybe this business isn't for you because you don't have the discipline to not trade. I mean, overall, guys, my strategy is not just black and white. Like, I don't have a mechanical system. Otherwise, I would have tried to automate it by now. Because what I can't put into an algorithm is my years of experience. I can't put 14 years of experience into an algorithm. Sometimes I exit on gut feel. Sometimes I enter on gut feel. But as long as I have confluences that I'm confident in, like trading these setups, that's kind of what I'm relying on. What I think of NQ, I mean, I don't have any thoughts on NQ either. But right now, I'm looking at this breaker to see if this breaker is going to send the market higher. Because I think we have a lot of range from yesterday that we could possibly make up. But I think the risk is elevated because we had such a massive sell-off. Right? But the weekly candle, again, has already expanded. And in my opinion, if you weren't short, you already missed out on the move. Because look at these weeks. All right, if you're trying to get short on a Friday, what happens into Monday? Say you got short on this Friday, and then it retraced here, and then Monday and Tuesday did this, and then it goes lower. Same thing here. You got short on a Friday down here, it closed here, and then maybe got stopped out, and then the next week opens and goes lower. So if you're expecting more bearishness on NASDAQ, you're probably better off waiting for next week to open up, trade higher, that way you can position yourself short at a reasonable area rather than chasing the market when it's already sold off. For me, backtesting, I never really backtested a whole lot, guys. I'm just being honest with you. Because you can't take backtested results into the live market. Yes, it helps you with your confidence a bit, but nothing is going to prepare you for live markets than compared to trading live markets. How do I know if the high of the day or low of the day has been put in? You don't. You can make an educated guess if it is, but a lot of times you just don't know. And you know what that helps you with, though? It helps you not over leverage in your trades. And you say, you know what? I don't know. Because what happened to me was I thought sometimes highs and lows of days would be put in, and I would go in with way too heavy size, and then I would get stopped out. Because when you start doing that and you start anticipating, oh, this has to be the high of the day, you get overly confident and you end up making poor mistakes. Win rate of an engulfing bar on the 4 hour, I would say 60-65%. To be honest, I trade the higher time frames. Like a fair bit of my trades come off the hourly time frame, but then I hold it for hours. You know, let's say if we had this bearish engulfing candle here after taking out the London high, you have to look at how long this trade actually takes to start moving in your direction without over managing your stop loss and without doing anything stupid in between. So let's say you went short after the engulfing candle and you put your stop loss up here. Your target was a 3-to-1. You know how many hours it took to hit that target? Just count it out. You know, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34 hours it took to hit the target. And in that 34 hours, though, is when inconsistent, unprofitable traders are in and out, in and out, in and out, in and out, instead of just entering one position and holding it. Who's outperforming? Let's say you're in and out, in and out, and then now all of a sudden you're down 5R. And instead, that one trader who went short and held for 33 hours is outperforming you. In that 33-hour time span, that one trader did nothing. Meanwhile, you're in front of the charts working your butt off for way less. Right? You're negative because you are trying to control the market. Instead of just submitting to the fact that once you enter the trade, you are no longer in control of that trade. The only thing they control is your entry, your stop loss, and your take profit, and then your emotions. That's it. You cannot force the market to not trade against you. Right? You cannot force the market to trade in your favor. You can't do any of those things. No matter how much sizing you put on, it's just about taking the trade and accepting the fact that you are no longer in control. So liquidity raids, essentially, I'm waiting for closures back below old highs. So if we have a swing high, let's say we look at this swing high, I need to see a closure back below. And sometimes it chops around a lot. Sometimes it goes above the high, it closes below, and then we get put in another high here, but you can see that it's having a hard time closing and pushing above that level. So again, even if you follow a system of taking a liquidity raid, you can still get stopped out because you can't control where that next candle is going to go. You can't control where the candle after that's going to go. Usually, you know, when I see a swing high, I'm looking for a closure back below. So if you have this swing high here, this closure back below, it at least allows me to put, a logical stop loss. Maybe my stop loss is here. Let's say my target's all the way down here at these age lows. Again, you have to hold the trade for a very long time. And if it comes back on you here, you're not just dumping the trade because you're uncomfortable with it, right? Because then you don't capitalize on this run here, which takes a long time to get to. Now, let's say if it runs down here and you're just uncomfortable holding it any longer and you exit. At least if you're exiting with 2.5R, your risk reward is positive, right? Your average loser should be smaller than your average winner. So we have traded down into this bullish fair value gap, and the market is slowly turning around. And I mentioned that this 4-hour fair value gap was something I'm watching on dollar CAD. All right, so I think as long as this holds, we have expansion, consolidation, which may take a long time. And then essentially, hopefully, another expansion leg. But that's just an educated guess, just like all my other trades are. But I'm going to hop off here, guys. I've been on here for quite a while. Again, please trade safe. It's Friday. Try not to do anything outside of what you normally do, okay? Have trade frequencies in place where you're not over trading, okay? Stick with consistent position sizing for a long period of time. That way you can prove to yourself that you're disciplined. I don't look at people's positive P&L when they break every rule in the book and say this person's a profitable trader. No, I just look at somebody that's gambling, that you know, I guess got lucky, right? When I look at a positive P&L, but I see you breaking every single rule, you're taking 30 trades one day, 2 trades the next day, I don't see any consistency in that. In long term, I don't see a profitable trader. So again, make sure that you're aligned with what you believe is profitable trading, right? And that's not trading every day. That's not over leveraging or oversizing or over trading. Those are not habits of a profitable trader. The habits of a profitable trader are people that can show up to the markets consistently and perform and execute at a high level without changing anything. All right, guys. So I hope you guys all have a great weekend. I'm not 100% sure if I'm going to be streaming next Friday because it's Black Friday, but I'll get with the team and try and figure that out. If not, I hope you guys all have a great holiday if you are in the States and celebrate Thanksgiving. And I'll see you guys next time. Take care.